I have 2 weeks worth of updates for you in this video. The stock market has been moving up, and so has my portfolio. I also made a big move with one of my positions, so stay tuned to learn more. I'm on the hunt for an infinite stream of dividend income. My plan is to turn $1,000 of Robinhood's money into $1,000 of my money, and this video series documents that journey. Remember, nothing that I say here is financial, investing, or any other type of advice. I'm not a financial professional. You need to do your own due diligence for your investments. Let's get started. My small account margin portfolio went up about 1.5% this past week, and the account value is $2,189. Keep in mind that this total account value includes about $10 worth of cryptocurrencies I received as rewards from a Robinhood giveaway last December. So the value of those is included in the $2,189, but is not included in my margin maintenance. My buying power has been reduced to $16.72, and for the first time in a long time, I'm well above the 5% threshold to keep me in the low risk status. I'm at 8.2% above my maintenance. As I've talked about for a couple of weeks on this channel, I haven't been really happy with the performance of NVYY. The distribution rate is great. However, the net asset value, or NAV, has been declining steadily. A chart on the Granite Shares website says it all. Here's the 1-year price performance of this fund. It has just slowly been heading down, down, down. And if we compare it with NVIDIA, you see a similar situation. So this is year-to-date price return. NVIDIA is up about 11.5%, while NVYY is down over 23%. So as I said before, the trade-off between high yield and price return just wasn't cutting it for me. So I decided to cut this one loose. Since the last video, I sold all of my shares in NVYY and bought into a new fund. I still think NVIDIA is a good investment, so I decided to stick with this stock. I sold all my shares of NVYY and bought a replacement, NVIY, from Rex Shares, another NVIDIA-based income ETF. What I like about this fund is covered right here on their website. It leaves half of the portfolio uncapped so that you have exposure to all of the upside, and then earns its income on the other half. It's still leveraged, but not quite as much as NVYY. So let's go over briefly the differences between NVYY and NVII. My previous fund from Granite Shares, NVYY, used 2 times leverage compared to the new fund's 105 to 150% leverage. From a high level, both of these funds are pretty similar, but there are some important differences. The two funds are about the same age, starting in May of 2025. So this is a look at price return starting from the youngest fund and comparing it with NVDA. And as you can see, the results are startling. NVIDIA's price return over that period is about 54.5%. NVII, the Rex Shares fund, is up about 10%, while NVYY is down over 43%. So this has not been a pretty picture for price return. Let's compare that to the total return over the same period. Things are a lot closer, but this is very interesting. NVII is up over 65.5%. It's done better than NVIDIA itself and significantly better than NVYY. So from a price return and total return perspective, dating back to last May, Rex Shares NVII beats Granite Shares NVYY. Let's take a look at things a little more recently. How about 1 month? NVIDIA and NVII are neck and neck, with NVYY trailing far behind. Now let's switch back to price return. The 1 month period, and again, it paints an ugly picture for NVYY. Even though NVIDIA is up almost 19% in this last month, NVYY is down over 1%, and the Rex Shares NVII is a respectable 14%. So this move makes sense from a price return and total return perspective, in both the short and the long term. Now I've switched over to dividends, and this graph shows the dividend amount paid for the history of these two funds. NVYY from Granite Shares is in orange, and it's been on a downward slope, and I expect this is simply a reflection of the declining value of the shares. NVII is a lot more erratic, with periodic high spikes, but overall there doesn't seem to be quite as much of a downward angle. Let's take a look at the year to date, and again you see the Granite Shares NVYY sloping down and to the right, with Rex Shares NVII bouncing around, but kind of ending up where it started. So continuing our comparison, both of the funds are very new, less than a year old, and only about 2 weeks apart in age. The NAV trend has been down for NVYY, which is the real reason why I sold the fund. And it's been stable to down for NVIY, but has definitely outperformed the Granite Shares version. NVYY has a significantly higher yield, more in that 75 to 90% range, whereas NVII is down closer to the 30% range recently. NVII's distribution has been more erratic, up and down, but it hasn't been really on a downward trend. Both of these funds pay weekly. Neither ETF actually holds NVIDIA stock, and they both use leverage, although NVII uses less. They're not diversified since they're based on a single stock. They have identical expense ratios. NVII has the edge on assets under management, which shows the amount of interest in the ETF. This is my purchase log for NVYY and now NVII. Back in July of 2025, I purchased $250 in shares. Since then, I've been reinvesting weekly about $2 a week, all the way through early January. At that point, I started holding the dividends aside. So everything from this point up adds up to about $304. And unfortunately, when I sold, I was only able to get $166. So I used that $166 plus all the half dividends that I had not reinvested since early January and bought about $191 worth of NVII. I was able to collect 2 dividends in the past 2 weeks from NVYY before selling it, 21.5 cents per share and 22.5 cents per share. Half of those dividends were invested in SPY-I, and the other half were split off to be invested into NVII. You can see all the numbers in blue are dividends that I did not reinvest back into NVYY. I held them aside and used those to increase my position in the new RexShares NVII ETF. These 2 distributions are around that 75 to 85% annualized rate. I also received 2 dividends from BLOX, about 9 cents and almost 11 cents per share. I split the dividends in half. These 2 were reinvested into SPY-I. The 2 in red are pending investment. I need a third blocks distribution before I have enough to make a purchase. Taking a look at Chippy, I received my 2 distributions, almost 54 cents and 50 cents. This is in the area of about a 40 to 45% annualized return. Those dividends were split in half and reinvested as normal. I have also received a SPY-I dividend, about 52.5 cents per share, and that is pending reinvestment. It'll be automatically invested on Monday morning. The SPY-I dividends are not a lot of money, but you can see a definite trend here. My first one was only 22 cents, and I've been building it up. Every month it gets a little higher, all the way up to $2.09 for the most recent distribution. So how did the portfolio's ETFs do over the last 2 weeks? Let's take a look. On April 22nd, right here, is when I sold NVYY and bought NVII, and that worked out pretty well. NVYY in orange is at the very bottom, and NVII in blue took a pretty significant upturn at the end of the week. As far as the rest of the funds, BLOX was up an impressive 7.7% over these 2 weeks. Chippy up almost 12.5%, which is great. And SPY-I up about 1.4%. So these last 2 weeks were great for the portfolio's value, which is why my margin status has moved into the low risk category. Here's my total return summary, showing everything at a glance. The value of my 3 ultra high yield ETFs is down about 46%, offset by the $210 profit of SPY-I, putting the portfolio as a whole down about 24.5%, which is looking a lot better compared to some previous weeks. Let me know in the comments, what do you think about selling NVYY and purchasing NVII? And if you found this video entertaining or helpful, please hit the like button and subscribe. The like button tells YouTube that you enjoyed this type of entertainment and helps me push forward. So I appreciate it each and every time you hit that like button. And of course, subscribing is the ultimate way to tell YouTube you like what you're seeing. Nothing I said today is financial, investing, or any other type of advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.